All right. Good evening, everybody. Hope you've been having a good week so far. Okay, so we've got a bunch of stuff to talk about regarding the market. I've got a few things I want to cover. At the end of this, if you guys also have other stocks that you want me to take a look at, do a little bit of technical analysis, I'm happy to do that as well. So if you guys want to, if you got anything that you can think of you want me to look at, you can always throw it in the chat. Or if you guys have any questions or anything, feel free to throw that stuff in the chat as well. And as I, take breaks in between and stuff I'm talking about, I can check on those questions and answer anything that you guys have. Actually, let me just double check. It appears to me that the audio is working, but if somebody could just confirm for me, because last week I did this and oh, thank you. Last week I did this and talked for about like 15 minutes, and then I realized everybody was putting in the chat saying can't hear you, so don't want to do that again. Um, that's weird that I would be getting an error about volume on Intel. Strange. Okay, not a problem. All right. So the last time we had one of these sessions, we talked about the market in general and everything that was going on. And if you don't recall, or if you happen to miss that, one of the things, so probably the main thing I talked about was that um, obviously with the new administration coming in, this is whether you're for it or against it, we're going through an administration like nothing we've ever seen before. The changes that they want to make are big and radical, and they are um, pushing to make some of them happen very, very quickly. Um, it's a little bit inspiring, but also terribly frightening at the same time. And we understood, and they knew from the beginning. The announcements were that expect things to get worse before they get better. And whether you agree that they can get to the better part, I think everybody agrees that we are currently going through the worst part. Um, but we had talked about that before, and we said that it would happen, and there should be no surprises in the way the market's been moving for anybody right now. And so hopefully you've been taking advantage of that. Uh, my viewpoint is there are a couple of major contributors to what's going on, and until we see some of that stuff go away or be taken care of, that the movement that we're currently seeing isn't really going to stop. Um, so obviously, they've talked a lot about pushing tariffs. It's kind of become, I think the last time I compared it, I said he's kind of using it as a cudgel for negotiations. Um, at the time, it looked like it was being very effective when he first announced the tariffs and stuff. It definitely had an impact. Um, and I said it was kind of like at the start of a meeting, if you slammed your fist on the table to make sure everybody was paying attention and knew that you were serious. Well, that effect definitely happened. Since then, there's been a bit of back and forth. Areas where it's been successful, areas where it hasn't really been successful. They've had to walk certain things back, change it around. Um, but ultimately, until we get the whole thing settled, because I don't think anybody agrees that long term that tariffs are the solution for things, not the bucket tariffs that are being thrown out. Um, Tariffs should be used as a scalpel, not as a hammer. So there are particular areas um, that it makes sense for the U.S. to say, hey, there are certain jobs that are now going other places. There's certain manufacturing that's now going other places that really there's no reason why we couldn't successfully be doing it here. And one of the big problems is that because those products or those services are so cheap coming from someone else right now, that it makes it very, very hard for anybody to start up and get to the point where they could be competitive. And so in those cases, it makes sense to say, we're going to add a tariff to those products to give our guys here at home a chance to build stuff up, get things rolling. And once they're at a level that they can compete, then we can look at sort of evening out those tariffs. And that's, in my opinion, that is the correct way to use it in normal circumstances. That's the correct way to use tariffs. And that applies to any country. Um, but on the other side of it, there are always certain resources that you absolutely need, and getting them from your own country is either not possible or not practical, and won't ever be practical. Um, Probably one of the biggest examples I can give you right now is potash. Potash is absolutely required for um, for fertilizing, which if the plan is to start growing a lot more, have the farmers start growing a lot more vegetables and stuff at home, then you're going to require fertilizer, and potash is a big part of that fertilizer. The levels of potash availability in the U.S. are actually low for the demand. And so about 80% of the potash that the US gets comes from Canada. And there's nothing wrong with that. If there's a resource in Canada that can be used, you don't have a way to do it, but then you barter, right? Then you find ways to say, okay, this is how trade partnerships work. You guys have this potash that we need. We're going to spend about this much money every year on potash. Here are some things here's some things that we have that you need, and we'll make sure that we get you a good deal on that for about the equivalent value. Now, um, the other part of that is that when you have a trade partnership, there's always going to be some sort of imbalance. There's going to be, and not um, like every trade partnership is going to have an imbalance. Whatever country you're dealing with, one of you is going to be buying more stuff than the other. Hopefully, that sort of evens out. So maybe the US has a trade imbalance where they are spending more money buying stuff from Canada, as an example, where Canada is spending less money buying stuff from the US. But in turn, if the resources that the US can get from Canada can then be turned around, put into a product that they can now sell to another country. And with that country, the balance of the trade goes the other way, where they're selling more to that country than they're buying. Then overall, across all your trade partnerships, the whole thing evens out. So it's difficult to look at an individual country and say, hey, there's a trade disparity between our two countries, and we need to fix that now. Because that's not really the way it works on a global scale. However, if the US is always in a position, and I don't know what the position is, but if the US is in a trade imbalance with every country they do business with, well, that's just a bad trade partnership altogether. And in those cases, there should be changes. So, for example, there are certain car manufacturing or part manufacturing jobs that happen in Canada. And I keep using Canada because it's the easiest example for me, but I could be using any of the other trade partners that the US has. So it would make sense, for example, if some of those parts that you said, yeah, we might be saving a little bit of money on labor by having that done in Canada, but if we move those jobs here, it would help our GDP, it would help our economy a little bit more. And if the trade-off is that we have to pay a little bit more for those salaries, then maybe that's a decision that we should make that's better for our country. Take that little bit of hit because of the other benefits that we're going to get out of that. And in those cases, to use tariffs, absolutely, it's very specific, it's very surgical. It's the right way to do it. So long story short, we need things like all this tariff stuff. We need to put all that to bed. We need to get past all that. There do need to be some balances made, but we need to get to the real negotiating that needs to happen for that. Because this stuff about, oh, we're going to do counter tariffs to the tariffs you're putting because of the tariffs that we first put on, or these guys are going to cut electricity to these customers that they had. Like, this is all nonsense. And that's why the market is in the state that it's one of the reasons why the market is in the state that it's in. So we need that stuff to stop before we can recover. The other big one is what's going on between Ukraine and Russia. There's always been some concerns about that. There are beyond just the loss of life, which obviously is the most important part of the whole thing. There are other repercussions that are happening because of it. Um, Europe is still just getting destroyed by the price of oil because it's not so easy for them to get oil once Russia was removed as a resource. So having having peace come between those two countries, which would eventually remove the sanctions from Russia, would help oil flood back into Europe, bringing their prices down. It would bring price of oil in general down, um, but specifically would help over there, which long term, there are a lot of good, again, trade partners over there that um, could help with when it comes to those resources that the U.S. needs from them. If they can get those resources cheaper from them, then that helps out the U.S. as well. Speaking of oil, the other part about that is um, let's just pop over to oil for a second. So oil has been coming down for some time. There's been some pops and stuff, but overall, today it was sitting down in like the mid to high 60s. That's pretty low for oil. And part of the reason for this is that um, there's been some negotiation where Trump had asked Saudi Arabia to start increasing the amount of oil that they're putting out, which has happened. They have increased production. But the other part of this is that if we do get peace between Ukraine and Russia, if we do get those sanctions removed, that flood of oil comes in, it tanks the price of oil for a while. And then what we'll see is I expect it will be fairly short term, but I would expect that the OPEC countries would then reduce production to bring that price back up. There's there's a sweet spot at which you want to have your oil trading, where at a certain level it's just too expensive and it causes havoc with everyone's economy. There are levels that things get too low and the profitability isn't strong enough to be maintainable. Um, so we want to keep it in that range, but I would expect that we'll see some dips and stuff. Also, as the U.S. talks about increasing their oil output, that will also contribute to that. And if they start pushing that now, on top of the fact that OPEC is pushing, and then if the Russian oil comes in, then we could see a pretty good dip. Um, Now, from an economy point of view, what that means is if we establish a new standard of where the price of oil should be, and it ends up being in this lower area, then that gets us into reduction of energy costs, reduction of transportation costs, mobility costs. All of those things help with the deflation of the economy, meaning that that's how we get prices to actually come down. One of the ways we can get prices to actually come down. Um, every now and then you see someone post online talking about inflation, and they will say, well, obviously these economist guys don't know anything because they keep saying that inflation is coming down, but the price is still going up. And one of the things I was just looking at earlier was eggs. And since October, the price of eggs has gone back up 74%. That's enormous. Um, but yeah, people are saying that if the inflation is coming down, then why are the prices coming down? Well, I guess what people don't really understand is that inflation is like acceleration in your car. It's telling you how much you're increasing your speed. So if you're doing 100 miles per hour and your acceleration is that you're doing an extra 10 miles per hour every minute, then at the second minute, you're going to do 110 miles per hour. Sorry, at the first minute, you'll be doing 110 miles per hour. At your second minute, you'll be doing 120 miles per hour. If you change your acceleration and bring it all the way down to 1 mile per hour every minute, then at your third minute, you're going to be doing 121 miles per hour. Now, you haven't sped up very much, but you're still doing 120 something miles per hour. You're still going very fast. You haven't slowed down. You've just stopped accelerating so much. Um, so beyond getting inflation down, we actually need some deflation happening to actually bring prices back to something that's a little more normal. And changes in energy will be one of the things that could help make that happen. So if we look at here, let me switch over to SPY here. If we look at the coming few months, um, all of the tariff stuff starts to get negotiated out, and all that gets put to bed. If stuff going on with Russia, they at least come to some sort of peace agreement. It doesn't have to be the absolute finality of it, but if they can get to the point that there's enough peace that the US, and I think this will happen sooner than later, but the US will remove the sanctions against Russia. So you get the energy stuff coming back in, and and then because of things like that energy and stuff, we start to see some deflation in the economy. It's going to create a very warm and nurturing environment for the stock market. Um, some of the costs for production and stuff within the U.S. will get cheaper. Um, People will be able to afford things, not just people, but company as well. Everybody will be have a little more affordability in what they're getting. Uh, we um, All of that starts to drive the GDP up. It also means that as companies start performing better at cheaper dollars, cheaper costs for their things, now they can start growing their businesses, and we start to see companies start to build back up again. And so I really think that somewhere, and I've been saying about 2 to 4 months, um, it's a rough timeline that I'm looking at, and that could change definitely. But my best guess right now is probably about 2 to 4 months that we start to see that stuff. We could have all those things align. And at that point, that's when I think we'll start seeing the market really start coming back up. And so whether it's whether it's closer to the beginning of Q2 um, or takes us into maybe the start of Q3 or a little maybe the end of Q2, I do expect that or at least for now, I expect that we're going to see the market continue back up into the back half of the year. Maybe a little bit sooner, maybe it's the last 3 quarters of the year, but I definitely think by the back half of the year we'll start to see these things turn around. So um, until that happens, we've got to deal with what we've got right now. Now, big picture stuff. Let me clean this up a little bit so it's a little bit easier to see what's going on. We've had price pushing up, and it's been on a pretty regular trend over the past year or so, even going back a little bit further. This is a pretty solid trend, but I think everybody would agree that more recently we have broken that trend line. And what I've been telling the people in AC&I for the last few months is all this pullback that's happening, I am totally okay with it. I'm still very bullish on the market, but I always said that if we get down, I've got levels here, uh, volatility levels that we use based on their modified versions of counter channels, basically. Um, Once we start breaking below these levels, and very specifically breaking below the 559 area, getting down here, this is the point where we've no longer got that bullish trend. We're starting to break that down, and we've got to start looking at the possibility that this could continue down. Um, when I look at this stuff, I always look at it in terms of cycles, and that's what I teach people in AC&I. And so we're very much in a bearish cycle right now, and we look at it across multiple time frames. And obviously, the bigger the time frame is that you're in those bearish cycles, the longer they last, the bigger the moves are. And so if we walk up, here's the weekly chart. It's also in a bearish cycle. And we could even go up to here's a monthly chart. We have for the past couple of months been in a bearish cycle. And most recently, if I go all the way out to a quarterly chart, you can't see the line right now. Actually, I could put something in that will show us where that is. Let's just put this table in here. Here's my quarterly cycle point. The cycle point is It's the price value at which the cycle will change between bullish and bearish. So right now, if the quarterly chart gets below 549.71, that would be an indication that the quarterly chart is in a bearish cycle. It was for a bit today, and I believe yesterday as well. And really to lock it in, we would have to end the quarter, meaning get to the end of March below 549.71, but we're kind of hinting at that. If we look back over the past 25 years, we had at the very beginning of that, we had a long quarterly bearish cycle starting in 2000, and that ended in October of 2003. So that was a very long bearish cycle. We had another one starting in at the beginning of 2008. That was the mortgage collapse. Um, we've had a couple of quarters where things sort of hinted at it, but they returned back up. And then obviously we had the pandemic was the most recent one. So in 25 years, it's only happened three times. Um, Now, just because we get these signals at the end of the quarter, it doesn't mean that everything is going to collapse for years and years. We have seen other instances where it just turned around the very next quarter. But it is something that I want to be aware of, and that's part of the reason why I've been saying 2 to 4 months um, before we start to see things turn around. So if we're going to get that continuation, let's move down to a smaller time frame like the dailies here. If we're going to get that, then essentially what I'd be looking for is so we have this cycle coming down, and let's say we have recently hit a bottom where it is going to come back up for a while. Then I would be looking for, or I would be watching these areas, the orange zone and the purple zone. I'd be watching those very closely because those were generally areas of support, which the price is now broken. So when it comes back up, I expect those to be tested as resistance. And if they get rejected, then I'll start looking for movement back down. And on the big picture, this is where I would really start, well, shorting the crap out of a lot of stuff. I've been holding off on a lot of short positions because the market had pushed up so high. We knew that there was some sort of correction that would be normal and necessary. And so instead of looking to short the market through a lot, in some cases I have been, but what I've really been doing is looking for where the bounce point is going to be so that we could take the next steps to the upside. But if this happens, if this scenario comes through, then I will look to continue or really actually start increasing the amount of stuff that I'm shorting for the next. This would be a period of, at least a month or two initially, and we'll just have to see how it goes from there. The second scenario that I'd be looking for in this case would be that the bounce comes up and actually gets above those levels. And if it gets above those levels, I still wouldn't necessarily be jumping into things. But what I'd be looking at that point would be if it could get back through, retest those levels as support this time, and see if it bounces to continue that move. And in this scenario, that's when I would start looking at going at least short term meaning 2 or 3 months. I would look at going long again for that period. And now this is just based on technical analysis, right? Because I did talk about, some really big changes that I'd be looking for. This would be whether or not those changes happen yet. I would still look at doing these things. If those changes happened, if the stuff that I talked about actually did happen, then in that case, this sort of move I wouldn't look at as a short-term thing. This is where I would be looking for entry opportunities for my long-term investments. Um, stuff that I would be looking at for, like retirement investments, those sort of things. I do have a list of stuff that I'm looking at to get into for this year. I had been, for people that don't know, I had been since 2022. I moved everything over into precious metals because I had the expectation at the end of 2021, there were key signals that we were looking for the market to come down. And um, when Jerome Powell said that they were going to stop backing the market, and in fact, they were going to switch from quantitative easing to quantitative tightening, that was my signal to get out and move it into something. I chose precious metals, basically. And I had been in. Initially, the plan was to stay in those until January of 2024, because that's when Powell said that they would reevaluate where they were at for the quantitative tightening that they were doing. And I estimated that building up into that, we would see institutional investors really start getting into the market, which we did see happen in October of 2023, building up into it. But because precious metals were doing so well at the time, I decided at that point that I would actually wait until the election. And so in just before the election happened in November, I switched to all cash, and now I'm waiting for the opportunity to reinvest that. So that's where I'm at with this stuff. So I am looking for long-term investment opportunity. Um, we can see the same thing happening across other indexes and such. So here's the Qs, and you can see the same sort of pattern where it broke below some of those levels. And so looking for this to turn back up and retest those. The other thing is, just because I'm looking for it to turn back up and start retesting, it doesn't mean that that actually has to happen right now. It could be that the price continues down. I have no signals at this point saying that these cycles are ready to turn back up. But if I do see those signals, then those are those things that I'm looking for. Either either it comes back up, rejects somewhere in this area and starts coming back down, or it's going to break through those areas, retest, and that would be my opportunity to go long. I can also look at DIA, Dow Jones looking pretty much the same. The one exception to all of this and the way the price has been moving is IWM. So IWM is the low cap stocks within the Russell 2000. And low cap stocks are generally seen as riskier investments. So generally what you will see is when times are really good, the market's really moving, everybody's making a lot of money, then your big institutions want to put more money into the riskier small caps. When things are tough or things are uncertain, they tend to get out of the higher risk low caps and keep the money into their slow and steady money makers. And one of the things you'll notice is that while a lot of stuff through the beginning of January and February, we saw, let me go back to spot just for a second here. We saw a pushback up. We actually made higher highs at the beginning of the year compared to where we were at in December for the S&P, for the Qs, Dow Jones, all of it. But for IWM, we did not see that. We made lower highs and then continued to the downside. This was a strong signal that big institutions are feeling very nervous about what's going on. And that was one of the other things that we had talked about in AC&I was the idea that big investors were not feeling comfortable with where the market was. They were getting some stuff, and the big movers that they really enjoyed, some of the stuff with Nvidia and Microsoft and all those they got into, but the riskier stuff they were unwilling to touch. So that was a clear signal for us to say, hey, let's prepare for continuation to the downside. And so that's what we saw. Two other things that I'll touch on, and then we'll start talking about some specific stocks and that sort of thing. This is the balance sheet for the Federal Reserve. This is tracking basically where that balance sheet sits at. Almost came out as a swear word. So back here, this big spike was when the pandemic happened. This was when the Federal Reserve said we're going to use every tool in our tool belt to back the market until the economy recovers. And so they invested trillions and trillions of dollars into it. Then we had the change here, this would be about when the first Trump presidency ended and we got into Biden, and you can see that the the quantitative uh, easing continued, not obviously not nearly at the rate, but that kept pushing up until we got to this level. So we have been watching how it was coming back because this was the area where they said, okay, now we're going to start tightening. And you could see that it's been coming out. It was pretty steady and it met um, everything that Jerome Powell said about how quickly the money would come out was he was pretty dead on with it based on what we saw. Um, you, it's a little bit hard to see, but you see that there has been some slowing down, but they continue to basically divest out of the balance sheet to bring that number back down. Um, so with regards to everything the Federal Reserve is trying to do to curb inflation and that sort of thing, we can see that they haven't really changed anything around this. And that in itself doesn't really tell us anything. Um, the only thing I could say at this point is I continue to watch this on a regular basis to see if there is any sort of real shift or change in the way this is working, because that would be a telltale sign of something. Now, what that would actually mean, I don't know at this point. We'd have to see what the change is, and I'd probably have to consult some people that are far more familiar with how the Federal Reserve works to know for sure. But for now, um, uh, just the fact that it hasn't changed gives me a little bit of comfort. The second thing that I want to look at quickly is this. This is a comparison of the 10-year yield to the 2-year yield for U.S. bonds or treasuries. Um, Normally, when there is an inversion, meaning that your the longer your term is for your bonds, generally they have a higher yield than shorter term, and that kind of makes sense because if I could get a higher return off of shorter term bonds, why wouldn't I just keep using the shorter term bonds over and over again versus getting like a 10-year or a 30-year bond? And so the longer term bonds usually pay better when the economy is good and the market's working quote unquote normally. When things get sort of terrible or bad, especially for the market, we can sometimes see a bond inversion where the lower ones end up paying better. Um, And I guess instead of saying that that happens when the market is bad, I should say that can help make the market bad because if short-term bonds are looking better, then investors might say, hey, why take risk in the stock market if these short-term bonds are paying really well? If the market's kind of iffy, I can move my money into those. And then when the market starts to look a little bit better, I could shift them back. Um, the problem with that is if too much of that happens, people talk about a yield inversion basically causes a recession. Not the inversion itself, but it's a telltale sign of recession happening. Now, at the time that we had this big inversion, they decided they were going to change the definition of a recession or what the signal for a recession is. And so, despite all of this happening and how things were over the past couple of years, there was no recession. You saw nothing. Um, the point I want to get to is that now, since August of last year, we have reversed that inversion. We haven't pushed up. We're not at the levels that we were at previously. But the 2-year bonds, I'm using the 2 and the 10-year as the example. There are obviously multiple different lengths to these bonds. And when you look at a yield inversion, you're actually looking at all of them. But an easy way to look at it is just to compare these two. Sorry, give me 1 second. Sorry about that. Um, so we are getting back into a normal space. And the reason why I think this is important is there's a real possibility that um, that we were going to see the way the markets have been going. It was very possible that we were going to see this turn around and head back towards an inversion. Um, when asked about the possibility of a recession, uh, Trump said that he couldn't say there wouldn't be a recession. Obviously, they want to be very positive about it and say that there's not going to be a recession, but I think quite truthfully, he admitted that he can't say that it won't happen because, like I said at the beginning of this, they're doing a lot, very big impact stuff and things that have never been done before in some cases. So it would be naive and irresponsible for them to say, oh, yeah, don't worry about it. We're not going to have a recession. And we all know how Donald Trump talks. It would not be, it wouldn't be out of character for him to make claims like that. And so the fact that he um, answered very honestly and said, I can't say that there won't be one was um, like a moment of clarity when that happened. But like I said, right now, the bond yields are not giving any sort of indication of that, despite the fact that the market is in a dumpster right now. So again, this goes back to my idea that, within 2 to 4 months, we could kind of get over all this and start coming back up. Okay, so that's what I had to say about that. So let's talk about some individual stocks. I'm going to, let's see if we've got some on here. LST and also Tesla. Um, yeah, let me start with, I'll go back to SPY first. Let's talk about this as an overall view. Um, Here, let me get rid of these little lines right here. Okay, so while we're looking at this where it is right now, we did see today we did not make a new low of day, which in the last 3 weeks, this is only the second day that that's happened. It doesn't by itself mean anything really, but it could be that we're going to see a little bit of a turnaround. It wouldn't be unusual to start the week being very bearish, and then towards the end of it, sellers have kind of done the selling they want to do. And in the lack of selling volume, the buyers that we do have end up pushing the market back up. So, um, as far as the setup, the configuration, what we normally look for with AC&I, so for people who are not familiar with AC&I, if you haven't heard a lot about it, AC&I uses a strategy through multi-time frame trading to help find areas where multiple time frames are all changing cycle direction at the same time. Um, the best analogy I always give is I won't even draw it out, but if you think if there were like three people standing behind a car and they're all pushing the car in one direction, they're going to be able to push that car pretty good. If one of those people steps around to the front of the car and starts pushing it backwards, they're probably still going to be able to move that car forward. It's just not going to go as far. It's not going to go as fast. And so if you think about um, different types of trading happening within different time frames, uh, there's going to be areas where they conflict with each other. There are times when, even though on the really big picture, on the daily charts, the price is moving up, but during that day, there might be a couple of hours where your day traders ended up pushing the market to come back down. Um, Overall, the candle today for SPY was a red candle. If I switch down to a 2-minute chart, there were several times during the day where there were big bullish moves that we took advantage of today and made money while the market came up, even though overall it was a red day for SPY today. And so the idea is that we want to be capturing trades when multiple time frames are all trending in the same direction, or at least turning in the same direction. Uh, and I tell you that because despite the fact that we're starting to pop up, from the bigger picture time frames within SPY, we're not at a point yet where we're starting to see the signs of multiple cycles all starting to change at the same time. There are a few lower ones, and intraday we might see some opportunities. Um, if I look at something like, here's the hourly chart. And so here, let me just clear this stuff out for a moment. So those mid time frames, like obviously we're not, the hourly chart sort of sits in the middle of things because most of us are either we're day trading and we're using those really small intraday candles, like 2 minute, 5 minute, or we've got the longer swing and investment people who are using larger time frames, 4 hour, daily, weekly, that sort of thing. So I think of like the 1 hour, the 30 minute, the 1 hour, the 2 hour, stuff like that is kind of in that midpoint. What I'm saying here is that this is a level where, first of all, we went up, we made a higher high today. We got a pullback, and now we're making a higher low that started at the end of today, and it's pushing up from here. And so it could be the first signs, because if you look at this, we have been trending down for a very long time. Um, and so it could be that this is the first sign of a new trend starting to push to the upside. So we'll see how tomorrow plays out. If this continues, what I'll be looking for when we get into tomorrow is if this can continue up a little bit, I'd be looking for, if everything looks bullish intraday, I'll be looking for this to push up. If we can break over this previous, this was the pop that we had when CPI numbers came out. If we can break above this high, then we start the momentum moving in that direction. Now it's really looking like we're building that trend. We start to see the higher time frames, like the 4 hour time frame, switch over. It gets into a bullish cycle. If we cross this purple line, which will actually drop down tomorrow morning a little further, this is the line, this is the cycle point where the daily chart starts a bullish cycle. So we could very quickly start rolling into all that, despite the fact that, as I mentioned before, we do have some areas of what will be resistance as we're trying to cut through it. That may slow us down and we'll look for rejection, but at least on the smaller time frames, or sorry, I should say the mid time frames, we're starting to see what could be the start of that movement up. So that's kind of where I'm looking for this for tomorrow. And then from tomorrow, we'll see how things go into Friday. And from that, it'll give us some clues into what we might be looking for next week. Of course, at any point, the White House could say anything that completely changes everything that we're looking at. And that's why technical analysis has been a little extra difficult lately because there's been so much fundamental influence through news events. Okay, so that's the basic idea for what we're looking for the market in general. And if I went over and I did the same sort of assessment, if I looked at uh, NASDAQ, I can assure you that it would look very much the same, and DIA. So they're all kind of moving together. So I would expect the same for all of them. So let's take a look at a couple of these other stocks now. So I'll start with NLST. So Netlist, unlike a lot of other stuff, has pumped up. Obviously, there's been some sort of news about this. Looks like, oh, I'm on the daily chart. Let's switch to this. Here we go. So their ER was obviously very good. There must have been something that's come out with them over the past couple of days to make this happen, because this is a giant, giant push up. I'm going to take a quick look here. Talking a lot about Pure Storage instead. And this went back to, yeah, I see no news events. This only goes back to February 20th, and it doesn't even talk about Netlist. So I have no idea what this catalyst is. It makes it a little bit difficult to speak to what's going on here. But if I at least look back out onto this bigger picture, if this is some sort of move that's going to continue, because like I said, I don't know what it is. And so it could be that whatever news created this to happen is going to die off very quickly and it will reject. But what I would be looking for is continuation of this to pop over the top of our weekly resistance right now. And so similar to what I was talking about with excuse me, with SPY and those other stocks, I would like to see this pop above here, come back down, retest that zone as support, And then if it could do that and continue to the upside, this would be because obviously you don't want to chase this move. If it was something you were already in, then at this point, just hold the thing. If not, if you're looking for the next entry opportunity, then this would be what I would be looking for. Normally, if we had a rejection because we ran into this big zone, which is a very strong zone, if we rejected here and started coming back down, then I would look at taking a bearish entry on that. But because of specifically how quickly this moved, if this did come down and like reject this zone and come down, then what I would be looking for next would be that it, whatever level it comes down to, I would still be looking for this next bullish entry. Right now, the trend is very much, even though it's just one single cycle doing all this movement, because it's gone over so many previous highs, this trend is very much bullish. And so I wouldn't want to play against that for now. Until I started to see uh, signals of trend reversal. And at this level, that would take some time. So the next thing I would be looking at would be um, the next entry I'd be looking at would be one of these two scenarios. If I were looking at normally, if I were looking at a target to exit at, this would be this orange zone. This would have been my target to exit. Um, so yeah, I mean, if you were holding, then I don't think you've got anything to worry about at the moment. If you're looking to get in, look for one of those two scenarios. Okay, let's see. Your thoughts on Tesla. Possibly has hit a low for a rebound, considering it has a 2-day upswing from about 260. Okay, so for Tesla, Tesla is something that it's actually on my long-term investment list. We've gone through a couple of things. So originally, when Tesla got down to this level, I was looking for the possibility that this is where it would bounce and it would continue up. That obviously didn't happen. And so I didn't touch anything with it. The next area I was looking at was down here. And again, we didn't really get a bounce. We didn't get our cycles transitioning. And so it continued to the downside. The next thing that I generally look at is it would be the midpoint right here. It did break through it. It didn't go too far away from it, and it has come back up to that level. Because these zones are sloping to the upside, um, sorry, not these ones. Let me rephrase that. Normally, if the zones are sloping to the upside, and they're actually not, they're actually just widening out, then when we get to those midpoints, if we get a bounce over those midpoints, then I have an expectation. There's a higher probability that the price is going to bounce and continue up on those midpoints if these are sloping up. If they're sloping down, then there's a higher probability that if the price comes up to the midpoint, it will reject and continue to the downside. The fact that um, the fact that we're kind of that they're not sloping up or down means that the probability of the bounce isn't stronger either way, but it still is an area to recognize for a potential bounce. Um, Part of the reason this happened might have been we're getting some goodwill because the president spoke out about it and um, basically did an advertisement for Tesla. So it could be that the bump that we're seeing right now is strictly off of that. So I'm not in any hurry to jump on this and say, okay, hey, it's time to come back up. What I'm going to need to see before I want to go long in Tesla again is remember I talked about those signs of trend reversal? I'm going to need some of those. And I generally talk about 4 signs of trend reversal. The AC&I people will tell you I mention this almost daily. And so at this level, what I would generally be looking for is, well, from here, it would be this zone here. If the price can get back above this zone, that's one of them. If the price can come back down and make a higher low and then continue to the upside, that would be another one of them. If the price makes a higher high compared to the previous high, which would be this level, about 265, then that would be the third. And the fourth one is not going to happen for a long time because it would be having a weekly candle um, close above uh, this yellow line, which is right now sitting at about 359. It's going to be a long time before Tesla can get above that. And so that would not be, it wouldn't be the ideal area to finally get into the trade because you would be, it like it's such a big move, you'd be missing a lot of the move up. So I'd be looking for at least two, if not three of those other things before I'm really ready to go long on Tesla again. I always tell people these weekly levels, the orange ones, I never go long on a stock while the price is below those levels. I never go short on a stock while the price is above those levels. So I like the movement that it's getting. It is strong. It is significant. These green candles have definitely been bigger than some of the red areas that we've seen previously, other than some local ones over here, most recent ones. So I like it, but I'm not seeing enough yet that I'd be interested in going long on Tesla. So I need to give it some time. What are your views on trading the VIX given the high volatility? If that sort of thing is your game, then I don't see a problem with it. Uh, the other thing you could do is if it's VIX that you want to trade, there are obviously some derivatives. There are some ETFs um, that track the VIX. So if you wanted to use an ETF instead, you could do that. Or if you wanted to play options on it, you could play options against those ETFs, which I've always said that one's not my favorite because if you think about it, um, uh, okay, so you've got SPX, and SPX itself is kind of a derivative of the overall market. It is an index that is made up of multiple stocks, over 500 stocks that are in the market to kind of give us an idea of what it is. So that it is a derivative of the market. The futures for SPX, which are what essentially VIX is based on, those futures are a derivative of that first derivative. VIX is then a derivative of that derivative, and then your ETF would be a derivative of VIX, and then the options on that derivative would be another derivative. So you're five derivatives deep uh, on the options that you're trading, and so I'm always a little bit wary of that. But like I said, if you're familiar with that type of trading and you want to get into it, I don't see it as any more risky than anything else as long as you're familiar with how the VIX moves. Like I said, if I were going to do it personally, I would probably look at maybe not as deep as options on ETFs, but I would probably want to go um, a little bit deeper than that and use something else like an ETF, or you could use the options on the ETF instead. Looking at one thing I will say about VIX is that people talk about gap fills in stuff, and people give you numbers like they'll say that uh, once a gap is made, and these are basically overnight gaps we're talking about. Once that gap is made, um, 80% of the time, the gap gets filled. People talk about that as a general term. I will tell you that in the case of VIX, 100% of gaps always get filled. The problem is you don't know how long it'll take. Sometimes it takes longer than others. And if you're playing some sort of derivative like an option that counts on time, um, or a future that has an expiry, then you might um, you can't guarantee that it will happen within the time frame that you need it to happen in. Okay, so let's look at TLRY. I haven't seen Tilray come up in conversation in a long time. So like everything else, this has been coming down. The difference is that um, Tilray has not obviously it hasn't been performing well. It hasn't seen a bullish market in a very long time. So for me, although there are some periods where it might go through a few months of pushing up, the way this has been coming down, um, I would really need to see some very strong signs of reversal. Um, it would have to, ideally, something like this would need to happen. So getting back above this zone, coming back and retesting them, and then pushing again, and that would have to be a very big move. Um, with the price range that Tilray is at right now, I suspect that they are probably going to have to do a reverse split at some point. Let's just go back and look and see if there was. Hasn't had one since. Um, Once you get into these values, you've got a very short time um, that Nasdaq will let you stay on as as a public stock if you can't stay above $1. I don't remember exactly what the number is, but at some point they're going to say, look, if you can't bring your stock price up, even if it's through a reverse split, we're going to have to drop you. Uh, and so, in particular, I don't like this is the type of stock that I just wouldn't want to trade at all personally. Some people want to get into this. They'll look for because sometimes there are news driven events that make a big pop happen, and so it's a little bit of gambling. But sometimes you can hit those when they happen. Um, it would require that you're following news and all that sort of thing on them. But in general, I don't like this outside of fundamentals, just the technical analysis of what we're seeing. I don't like the idea of getting into Tilray at all. But if I were to do it, this is what I would need to see happen, this type of move here. Looking at Intel, Intel has actually surprised me a little bit. There are a lot of reasons why Intel should be pushing back up. The one thing that Intel has working against them is that AMD is kicking their butt in CPU work. And it's going to take them a little bit of time to recover. However, all the other stuff that Intel has been doing, they've been playing all their cards properly. And they even got a huge investment from the Biden administration because one of the things that Biden and Trump have agreed on is that um, there is an enormous risk in having most of the processing power that the US uses coming from a little island that sits right beside one of their biggest, I don't want to use the word enemies, but one of their biggest adversaries. Let's use that term. Um, to the point that the US constantly has to keep aircraft carrier groups relatively close to that area in case they should ever have to step in and defend Taiwan, because there's no mistake about it. If China ever says we're taking Taiwan, the US has no choice but to go in there and stop them. Because if they don't, then China could end computer processing. It would destroy the US. We North America does not have the availability of the right type of foundries, let alone the quantities they would require to keep computers running. And the time it would take to build that up, it would cost trillions of dollars would have to be invested. Um, Over time, if it was done slowly and at a rate that would work, you could get it done with billions. But the pace at which this would have to happen would mean that the US would have to basically go to every other country that has anybody that knows how to do this stuff at a high level and pay them exorbitant amounts of money to move themselves to the US, they would have to be buying resources that they need because a lot of the resources are not local and can't be local. And they would have to pay exorbitant amounts of money to expedite moving those resources. They'd basically be taking those resources from other people that also wanted them. So you'd have to pay way more money than you normally would to get that. It would be a disaster if China took over Taiwan. Um, and so it's a horrible position to be in. Like I said, it's so horrible that those two guys who are like polar opposites and hate each other, this is one of the things that they both said, oh yeah, absolutely, this has got to change. And so they put billions of dollars into Intel to help them build more local manufacturing. Now, the manufacturing doesn't necessarily have to be directly in the US. There has been talk about building those foundries in Mexico, where it would still be cheaper labor, but it's much closer to home and um, much easier to protect. But it would still help keep the cost down because the cost of local foundries and stuff will bring the price up on processing. And at a time when processing is booming, we want beyond Intel. Um, we want foundries to provide for everybody. AMD, NVIDIA, obviously. We need all of that to be closer to home. So I'm a little bit surprised that we haven't seen Intel do better because they have had big investments, and you would expect that we would get more results from that. That being said, um, all the stuff that I talked about previously with the moves that I wanted to see coming out of SPY and the other stuff, we're kind of seeing that happen with Intel now, where they pushed up, they did run into this resistance zone and rejected it, but this bigger purple zone, the monthly zone, um, it was below that zone, which is a horrible position to be in. It got back above it, and now it's back in this area retesting it. We're starting to see a couple of signs of, all those guys were standing in front of the car pushing it backwards. We're starting to see signs of some of these guys moving around to the back of the car, starting to push it forward again. And so basically, um, this purple line right here, if SPY can get over this line, which is currently sitting at about 21.21, above that zone, I'd be ready to get into a long position on SPY. It would be, compared to this start of wave three moving up over here, it would be a higher low, meaning we'd be starting wave five in a trend. And the counting of these waves is important for me because what I teach is depending on where you are within a trend, you're going to trade differently. What you do when you think maybe a trend is starting is different compared to how you would trade when you're in an established trend versus if you feel that you're getting to the end of a trend. And so the behavior is a little different. Um, this wave five that we'd be seeing puts us into a higher probability position, which becomes a good spot to get into a trade. So definitely if we got over that level, and that line is actually going to move down tomorrow. So I hit the right button here. Yeah, so if we can get the price above that level, that's where I would be looking to get into something. And I would probably get options like maybe the 22s, and I would probably go out to the April 17th expiry. April 17th would be the next monthly expiries. And generally, when I take swings, I prefer the monthly expiries because there are more options that expire then. And that means that your liquidity on your options is higher. It means that the spread between the bid and the ask are going to be a little bit closer together. It's going to mean that getting in and out of those trades is going to be overall easier than other expiry dates within that zone. Um, Ideally, at the very least, I would like it to see it hit this midpoint right here that's at $22. But if we could get a big push, if we could start rolling things out, we could get up into this level, back up around $26, get back up to that resistance area. It wouldn't be a quick thing. That would take time. I can actually, let me check that very quickly. this is on the daily chart. That's good. Let me make sure this is on weekly time frame. It is. Okay, so normally, um, on average, the time it normally takes for the price to move from the bottom, we're talking about these orange zones here. Normally, the amount of time it takes to move from the bottom of that zone to the top of the zone, on average, it takes 54 trading days. That's a long time. So we did have a very, very quick movement here. It went very, very quickly. I can't say that that next move would take the same amount of time. This was literally a matter of a few weeks that it did this. So I can't say that it would do the same thing there. I I wouldn't bank on getting all the way to that spot with the April 17th expiry on the options that you have, but you could get a pretty good chunk of that move. If you really wanted to hold longer and you wanted to go a few months out, you could do that and see if it got all the way up to the top. Obviously, the further you go out, the the more the more subdued the movement is. So you wouldn't necessarily make it would reduce your risk, but it would take longer and it would take bigger moves to make big gains on a move like that. Um, so yeah, that's what I'd be looking for Intel. I'm bullish on Intel despite how big of a move down it made. If it does not break over that and actually comes back down, as long as it doesn't make a lower low and fall out the bottom of this zone, I would still look for a similar move to that to happen to go long. Excuse me. But if it breaks out below that zone, I would kind of let things reset. Give it a little more time before I was looking for a long position. Apple, let's take a look here. So Apple has been moving completely different than the rest of the market. It's kind of been moving a little bit on its own, doing some things differently than the rest of the market. It's still sort of really big picture making similar moves, but um, a lot like IWM, it didn't see new all-time highs in the beginning of the year. It didn't in December like a lot of other stuff. It was really low in December and started coming back up into the very end of December, where a lot of stuff was at new all-time highs earlier in the year. And then it didn't really recover the same way. It came back up. We got this big dip down. And again, anyway, at this point, like everything else, it's in these bearish cycles. We have hit the bottom of the weekly zone. And so I would look for a bounce in this area. The problem is, um, so the ideal trade that I would want to take would be we get a bounce here. We start with a few of those cycles, like the 4 hour and the daily, starting some bullish cycles. Now, this red line right here, this is the 4 hour cycle point. So if the price crosses above that line, then the 4 hour chart starts a bullish cycle. But the daily cycle point is still pretty far away. And I think we've got the weekly. Yeah, the weekly cycle point is way up here. It's very, very far. So it's going to take time for those to align because we want those to be much closer together when that happens. So as much as I would like to see a bounce from this area, it wouldn't mean that I would immediately be looking to go long on Apple. I'd probably need the ideal scenario for this because the other thing I'm putting in here is I turned on the daily volatility range. When we're in this type of scenario, if the price starts to come back up, a lot of times this smaller time frame zone, as the price comes up, it keeps pushing the price back into the bigger time frame zone down here until this zone comes down far enough to meet up. So it combines with this, if this green zone comes down and combines with that orange zone, and then we get higher probability setups for this to continue to the upside. So what I would really like to see with Apple is that it actually just plays around in this area for a while. stays down here and consolidates sideways for a bit to let all that happen, that would bring this zone down here. It would bring the 4 hour cycle point closer. It would get the daily into a range. What I want to see is when a cycle starts, the best moves you get are the ones where the price crosses, like these two lines are closer together and it crosses both of them in a very small period of time. So, like within a candle or two, when you get those. Um, when we look at examples, well, that one, there was a pretty big space. But like this up here, we really see trends change when we cross those together and then they just continue like that. We kind of had that happen here where we crossed. Um, Sorry, I've got this on the daily time frame, so it's showing a little bit different. Let me drop down to the 4 hour. And you can see that we've got a big divide between them. And then in this space, we end up breaking below, and it's not a lot like this is four candles, but this is really one day. So within one day, it crossed one and then crossed the other. And so we get better movement to the downside. So that's what I want to see. I want these to be closer because generally, once they start spreading apart, you get stuff like this where the price came back up, it crossed over one, it didn't really cross over the other. Instead, it rejected that zone and continued with that trend. You see how we've got this trend from this high down, we come back up, and we're continuing making lower highs and lower lows, building that trend to the downside. That's generally what happens until these lines start to get closer together. So give this a little bit of time to consolidate sideways, um, then see if we can get bullish cycle starting to push that back up. The other thing that might happen instead is this isn't done coming down and it breaks under. So in that case, if the price comes under this zone, then I'll look for it to come back up, retest that zone, and then come down. This would be the next area where I would want to short Apple to continue to the downside. And realistically, this purple line right here, this monthly mid, that would be the next target that I would be looking at. Notice that in this case, these purple zones, they are sloping to the upside. So higher probability that we bounce. It's not a guarantee. It's not, I'm not saying it's a high probability that it's going to bounce. I'm saying that it's higher probability than if the line was flat. Yeah, so that's what I'm looking at for Apple. I see NLST. It's going back a while, but NLST won a $118 million lawsuit against Samsung, upheld in appeals court. Okay, that's good. Can you please take a look at SoFi? Um, I seem to remember somebody asking about this previously. I don't remember what this does. Operates student loan refinancing sector. Yes, this is coming back to me. Which may face volatility due to potential change in federal education funding and oversight from the Trump administration. That is interesting. I don't know. They don't say good or bad what would happen with that. In the position that this is in right now, um, obviously, like everything else, it's in a bearish cycle. It did go through this period here. Notice that we went from um, so we were in this bullish cycle. We're making higher highs and higher lows. We get up to here. We come back down. We make it's still a higher low than the previous one. But when we head back up, we don't make a higher high, meaning that we have kind of paused the bullish cycle has now stopped because when we have a bullish cycle, we expect we're going to make higher highs and higher lows. In this case, it stops here, it starts pushing down. And instead, what we now realize is that this was the start of a bearish trend. We went from a high down, came back up to a lower high, and now we've made a lower low. So this is very much trending to the downside. It has stopped in this area, which could, even though we got a little bit below it, this area could be providing support for it. So we'll watch. But for now, what I would be looking for is If it does come back up, I would be looking for continuation to somewhere in here, and then I'd be looking for that next potential leg to the downside. Um, for me to see trend reversal that we would normally look for within right now, to look for this to switch from a bearish trend to a bullish trend. When I talked about all those signals that I need, there's a lot, and um, that weekly line is going to cross its way up here. If it was going to make a higher high, that would be up here. The only things that it can do quickly would be get back above that weekly bottom that's right there. And then the other thing it could do relatively quickly would be, let's say this move is that it only gets up to here, comes back down and retests that zone as support. And from there, if it then started a new wave to the upside, this would be the only or the likeliest next possible scenario that I would look for a bullish move on this. Otherwise, like I said, what I'd really be looking for is actually taking this to see if it could push further down, or if the price doesn't actually get back inside, if this just continues to the downside, I'd be looking for this to come back up and retest as resistance and then short it on the next move like that. And when I say retest, I hope you guys understand that what I'm saying is that this zone is going to continue this way, and it would be retesting this zone, which is extended out over here. Let's see. Okay, so tracks, time permitting, could you shine light on coin competing after crypto shenanigans and current immense actions? You see any areas for a potential bounce? I'm assuming you mean to the upside. So let's take a look. Very similarly to everything else, you can see we're definitely in a bearish trend, looking a little bit like what we saw with SoFi, where we got so we got a little bit below this bottom, but it could actually be holding it and ready to bounce. It did get to the monthly mid. Notice the monthly mid is sloping to the upside, um, and so it is a stronger bounce if it gets a bounce from there. It's very close to starting those bullish cycles that I talked about. You see, those two lines are pretty close. So if it could get above those, it would be good. It's not going to be all the signs that I'm looking for a trend reversal, but we're starting to see some of the initial ones potentially. And so let's think about this. The best scenario that I could see for a bullish move, at least the ideal one that would get you into a trade, would and I'm talking about like getting into a nice higher probability trade that has a better chance instead of just trying to guess the bottom. So probably the best case scenario to get a good trade would be that the price continues up, gets above this previous high over here, excuse me, something like this. Then it comes down, retests this orange zone here, and then starts another cycle to the upside. So essentially, if this is wave one coming up, the pullback is wave two, we would be looking for the start of wave three in this scenario after wave one went higher than this previous high over here. That would be the best case that I would look for. It would be the nicest trade that you could get for a potential start to a pushback up. Very possible at this point, but like I said, news lately, news is king. By far, news is king. Uh, and then we've got MU. So MU obviously had a bounce today. I don't know what the news was on that. It was definitely not that. 5 hours ago, 10 hours ago, 14 hours ago might be better. No, that was them lowering the price. I don't know. I don't know if you guys have any um, I don't know if you guys have any news like why Micron jumped so much today. Outside of that, I'll kind of take news out of the picture. Um, so let me zoom out a little bit. So it was obviously up very high. It got down below these levels. It's been really kind of oscillating sideways through here. It did get, here's our monthly mid that it dropped under a few times, but it kind of plays in this area. Um, they are trending slightly to the upside, and that area is holding. So, um, oh, excuse me. I've got to remember not to drink anything carbonated while I'm trying to talk for a long time. Catches me at the when I'm off guard. Um, so although this is what I generally term some complex wave setups, and I won't get into explaining complex wave setups, but it's something I teach in AC&I and the C&I course as well, to help people understand price movement. But overall, despite the fact that they're complex waves, they have been bearish until now. Um, but we could be seeing the start. Uh, we're at least seeing the start of waves to the upside for now. This one candle is the first one that's made all the crosses to get above there. It is above the weekly one as well, so that is good. Um, so for now, I'd be looking for, I mean, the wave has already started, so it would be hard to chase it to get into it and keep playing. But essentially all the stuff that I'm looking for reversal, they kind of all, or at least a bunch of them have happened. It's made a new high. It is already, it didn't get outside the bottom of those levels down there. So they're already above. And we've crossed over that weekly line that I was talking about, the weekly cycle point. So I like this. Probably the scenario that you want to look for so you actually get an entry is that at some point the price actually comes back down a bit, something like this, doesn't make a lower low, not too far away from these cycle point levels, so that when it does come down, it can quickly cross back above both of them. From a Fibonacci level point of view, the ideal zone actually got pretty close to it, but the ideal zone is this is a 618 retracement. So I that to me, that's always the ideal spot for a bounce for a continuation in a trend. But overall, anywhere coming back down and bouncing anywhere within this circle, not by time, but I mean the between 92.70 and $90 in this space. It might happen sooner, it might happen later, but in that price range, that would be the ideal area for that to bounce and head back up. That would give you the entry that would give me the entry that I would want. Uh, I This line goes over a couple of days. I have no idea how much time that would actually take. I wasn't accounting for time when I drew that. It just drew it for clarity. So it might be something that happens within a day or two. It might be something that takes more, but instead of just trying to chase it from here and ride it up, I would want something like this to happen instead. It's a higher probability entry than just trying to chase something and hope that it keeps going. Insight into Southwestern. I've actually been watching Southwestern for a while. It was one of the stocks that I was contemplating putting on my watch list for this week. I did not. Um, what just happened? Where's where's the Southwest chart? Okay, we've got 4 hour candles. We've got data. We switched to the daily chart. Okay, I don't know what just happened there. It was kind of ridiculous. Yeah, so here's here's the bad part about it, for me, not necessarily for you. Um, when I run scans. I run scans every weekend to look at the market. And what I'm looking for, all these zones, these levels that I've been talking about, I actually run scans to find stocks that are sitting at the zones, either sitting at the bottoms and like this, or sitting at the tops like this, because as higher potential areas of resistance and support, higher areas where the price could bounce, I want to find those to look for opportunities for price movement. And then what I'll do is I'll go through and I'll scan. Once I've got the scans, I'll look at where the price is. I'll look at how close our cycle points are and look for the ones that have higher probabilities of being good setups for trades going into the next week. And then uh, I put a video together and I post it so that members within the AC&I chat can kind of see those and they can kind of look for themselves, get some ideas for potential trades over the next week. Anyway, LUV was on that list, and so this was Friday, this was Monday right here. So I did these on Saturday and did the evaluation. Remember when I talked about that zone getting down and having those zones combine and then looking at it? I something about it, maybe it was just everything that was going on or um, with oh, it was, yeah, it was just the fact that there have been so many plane issues over the past few weeks that I didn't really feel comfortable looking at an airline. And I mean, look at the jump up that it made. Um, yeah, so that was a huge $28 up to $32. That was what, like a almost a, let's see, this closed down here, 28. So probably like $3 would, yeah, it was over 10% that it jumped up in that one day. So that would have been crazy. Now, um, it's made that move. We're looking to start a bullish trend. We do have this bullish cycle now. We made a higher high over the previous high. We've crossed over those lines where we had crossed over that weekly. We're not there right now, but essentially we've got that wave one coming up. It looks like we are now getting into a bullish cycle. So what I would want to see from here is that we haven't quite started a new bear cycle to the downside. But what I'd like to see is, this being the high point, I would want to see it come down. It doesn't have to come down too far, um, but get a little bit further down, start a bearish cycle, bounce, and then come back up. Yeah, again, there's some stuff. TradingView must be having a couple of little issues. My other lines aren't coming back in. But essentially, this is what I'm looking for. If it can just pull back a little bit more, see this red line right here? If it could get back under, 29.93 just for like half a day, that would be all I would really need. So then if it turned around after that, started pushing back up, that would be the signal I'd be looking for to take this further up. You could, as a proxy, look at a smaller time frame, something like the hourly time frame. Um, that has just started a bullish. You see, it had a bearish cycle coming down, and it just started in the after hours. It just started a bullish cycle to the upside. You might have an opportunity to kind of chase tomorrow if things are pushing to the upside. That would be a little riskier, but that would be another possibility. But yeah, I like this to the upside. I just look for the right entry opportunity. And then we've got PLTR, and I'll probably make this one the last one. Um, so PLTR was booming until Doge came in and they said one of the areas they're definitely looking at is the military. And word was that funding for things like PLTR was going to take a big hit. And that's when this happened. Now, I don't know a lot about exactly what it is the PLTR does. Um, and that's because nobody really knows a lot about what PLTR does. My understanding is that they do work around a lot of um, data collection and what's the right word for it? Data collection and data modeling. And a lot of times they use that information to, specifically with the military. And so I don't, I've got some ideas of what they could mean by that. Definitely, if you heard the CEO talk after the ER, um, he it was really weird. But one of the things he said was that, we work with our customers, we work with our partners, to help them do the best job that they can. And, if sometimes that means that they have to kill their enemies, then we assist with that. He said something like that. And everyone was like, wait, what do you mean? Don't you process data? What do you mean you're killing people? And so it, it definitely lets the mind wander about what exactly it is that they're doing. But the point was that they really, or at least their investors very much feel that there is threat of them losing funding. And so that's where this sits right now. So because of that, I'm a bit cautious because sometimes I hate to use the word paradigm, but sometimes there is a paradigm shift in a particular sector where the rules of the game are changing. And in some cases, that kind of pushes some companies out of the game. And I don't know if what we're seeing here is one of those events. So I'd be very, very cautious about PLTR for now. If you're feeling particularly bearish about it and you don't think that things are going to go well, then I would either be looking at from this point a rejection to take another leg down, or if it moves up, gets to this point, look for a rejection to take another leg down. If I was bullish on the whole thing and think that that was just a small thing and that very quickly they'll realize that this is one of the ones that they want to keep funding, then in that case, I would, hmm, this gets a little bit more difficult from where we're sitting. Honestly, I would probably have to see the price break back above this zone, come back and retest it, and from there make the next move. I would really want to have some confidence that this is really making a comeback um, before I would want to do anything with it. Okay, so that is everything I've got for this week. I'm hoping that we see a little bit, doesn't have to be really long term, but at least for the end of this week and maybe into next week, I'd like to see a bit of recovery. We're kind of beating the crap out of the market here. I think people just need some time to breathe. So that's what I'd like to see. If it does, we've talked about some opportunities that we could take short term, and then we'll see how things play out long term. Keep an eye on the news. Volatility overall is very, very high. If you look at SPY, it's more than triple what we would consider normal. Like it's more than quadruple what we would consider normal volatility. So one of the other signs of things getting back to normal will be keep an eye on the volatility for SPY. If it starts making a drastic drop, then we'll start to feel like, hey, we've weathered the storm. That's kind of starting to end, but I don't think that's going to happen particularly soon. And then other than that, keep an eye on the news. And if you guys have any questions about any of this stuff, any other tickers that I maybe didn't cover, or more questions about the one that I did, if you've got questions about AC&I, what we do over there, all that stuff, you can hit me up in the chat. You can, for some of that stuff, you can ask Steve as well. So that's it. Everybody, thank you very much for coming tonight, and I will see you all tomorrow.